The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go and I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Almost everything is more complicated than it seems, but almost nothing is hopeless. Not even the market, folks. Oh, baby. Here we go. Market-wise, let's take a look at it out here. Dow Industrials are down 17. Nasdaq's off 29. S&Ps are down 8.5. Gold contract down $3.20, trading at $1,087 an ounce. Silver up 14 cents, $14.05 an ounce. Silver's back inside the $14 area. Got up there 4 separate times last week, only held it once. Platinum up $7 at $8.28 an ounce. Copper up 2 pennies at $1.96 a pound. Light sweet crude down $1.12, $28.30 a barrel. 10-year up down 3 ticks, 128.11. 30-year up 4 ticks, 159.08. King dollar up 50 cents. 50 ticks rather, 99.07. The euro is trading at 109, and the yen is at 117.50. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And as one of the Tigers say, unless an elusive bounce really comes in this market, we go lower. Bottom line, folks, I love doing the 3 o'clock in the afternoon show, particularly doing this show in the last week and a half is a trip in itself. Why? Bottom line, all last week, market couldn't hold, right? This morning, opens up again, market couldn't hold again. Well, what the market was doing here, folks, is coming into the lows that were established last Friday. We had a price spread today of 1907 to 1856. Right now, you're at 1865. I suspect, guess what? We're going to run this baby up to the 1878. We'll see what ends up happening as we move up to that level. If we take a look at the SPY, what you have with the SPY is this. The SPY traded as high as 190.11, as low as 186.20, and the low on Friday was this 185.52. I suspect as we come into the close here, you're still going to have high volatility, but we're going to see the SPY turn positive also. This is going to be wild watching this whole thing shake out because the deviance is just about as good as you get, meaning you broke down every single day last week, got to a lower low. Today, futures are up big in the morning, broke down again. What the difference is, however, is that we didn't break. Well, let me look at the Qs to make sure the NQs. The S&P futures didn't break. The S&P futures didn't break the lows, and the futures didn't break the lows. In both cases, the NQs, the low is 4089. We got the 4091. Bottom line, we get 45 minutes, an hour to see what's going to happen there. Now, what's going to be really wild is this. That's my take on how we're going to come into the close. When we close, now this is what's really going to be wild. Big Blue, IBM is coming out with numbers after the close, and this Big Blue, folks, is a dog, big time. It hit a low today of 128.67. They're coming out with their numbers right after the market close, Big Blue broke lower and broke lower on volume. Now Big Blue's been on a one-way trip on the way down. We've gone from $210 down to this 129 area. So at 129, what we're doing is that we're going into the $130 area, which brings you all the way back to May of 2010. That area, you're coming in with a little lighter volume. So what it looks to me is that hard to believe that Big Blue actually might get a bounce also. But Big Blue got a lot lower to go. I suspect Big Blue wants to get down into the 116.80 area, okay? So it's a big number, man. I mean, this is going to be wild watching this whole thing shake out. After the close out here also, you get Netflix coming out, you get Cree coming out, eBay's coming out. So you get a lot of numbers coming out. The volatility is going to continue. Gold contract, what do we have with gold? Gold contract out here today down $2.40. We're at 1,088. You get sideways move out here. You get 151,000 contracts. Gold still wants higher price. When I say higher price, we're at 1088 and wants 1113. Now that being said, HUI, XAU are getting toasted. The HUI is down $7.37 at 99.34. That broke the consolidation it was in. XAU had broken that consolidation last week. Silver, we take a look at the silver market. This is where you talk about a little deviance here too. Silver got back inside the $14 area once again. Has the volume now, and this is where this is going to get wild. So silver is at $14.06. We've done 44,000 contracts. Silver's going to make a run to this 14.38. So there's divergence inside that gold market and that silver market in a big way. Bonds. We're going to take a look at the 10-year bond. What we have with the 10-year bond is this. 10-year bond right now is trading at 128.11. You've done 1.4 million contracts, and that's good volume. It's been a sideways move. When I say sideways, we mean today. 30-year bond. What do we have with the 30-year? 30-year bond is trading and went to an all-time high last Friday. Hit another all-time high out here today. Looks like it's going to close at an all-time high. 248,000 contracts, and that's good contract volume also. Not as big as Friday, but it is good contract volume. Some of the, if we go look at the 3 Qs, inside the 3 Qs, this is what you have. Yeah, see, this didn't hit the lows of Friday either. Friday, we get down to 99.51. You're at 99.88. You're down 39 cents right now. And she's going to crawl on the way up. The volatility's here in spades. It's going to be wild watching this whole thing shake out. The small caps, folks, what the small caps had done last week, small caps took apart the September lows, and the small caps are showing that in September, it had taken out the August lows. Last week, we took out both the August and the September lows. Small caps are leading the way down. This is Tom O'Brien. This is TFNN. Dow Industrials right now down 32. Nasdaq's off 36. S&Ps are down 10.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome to the Hotel California. Such a lovely place, such a lovely place, such a lovely face. Plenty of room and
Welcome back, folks. And sad but true, Glenn Fry passed away over the weekend, and he had so many great songs. And, of course, Hotel California, that's right here at TFNN. So he'll be missed, no doubt about that. Huge talent. Dow right now is down 21. Nasdaq's off 33. S&Ps are down 8. Inside the Dow Industrials, let's take a look at strength versus the weakness. The strength, United Health is up 2 1/3% at 253. Procter & Gamble is up 2% at 145. You get Big Mac up 1.5% at 183, and Nike is up 1%. Taken away from it on the way down, Chevron is down 2.5% or $2.28. ExxonMobil's down 2.5 at 196. DuPont is down 2 1/3 at $1.29, and Caterpillar is down 1.5 on 93 cents. Inside the NDX 100, what do you have? The taken away from it is at INCY. That's down 5.5% at 452. BMRN is down 5%. Those are both the biotechs. That's down $4.31. Autodesk is down 4% or $2. Express Scripts is down 3.8% or $2.90. The leader inside the Index 100 is Viacom. That's up 4% or 161. Netflix is next. Netflix is going to be wild after the close out here, folks. Netflix has numbers. That thing always likes to run high, low, big time, high volatility. That's up 2.5% at $2.86. Ultrasalon, that's up 2.5% at $3.89. And Expedia is up $2 2% at $2.16. Some of the higher volume stocks in this market, and this will be a low volume market out here today. You get Apple down $1. You have, let's see, Intel's down 17 cents. Twitter is off $1.37. Twitter continues to get hammered in a huge way. Marvell is up 35 cents. You got Coca-Cola up 35. Oxy is down 174. If we go over and take a look at a couple of these oil stocks, ExxonMobil backing down 186 today. Now let's go take a look at the actual oil market. So oil today down 2.7%. We're at 29.54. Look at that baby, man. It's pretty amazing. Yeah, and this monster volume, man. This baby's going lower. It couldn't hold price from last night. Has juice on the way down, and you know, you get your pit close, you get electronic trading. Oh, I see what it did. Interesting. So when we were closed yesterday, oil traded down to 29.36, I believe, 29.35. It got down there 2 separate times today. It got down there right at the at 14.10. Now that's when the pit trading closes, and you're laying right there. So bottom line, yeah, oil can go lower. That's how that thing shakes out. You know, that's how it shakes out. We go take a look at the XLF. Now the XLF, folks, these are the financials, of course. And what you do have with the financials came out. Bank of America came out today. They came out with numbers. Numbers were good. Bottom line, couldn't hold price. Bank of America is down 19 cents. Now that has broken the October low as well as the August low. And if we pull this back and we take a look at it, look at this. This is pretty intense. So this has been in a consolidation since July of 2014, and it's breaking that consolidation. That's going to set up. That's going to set up your next leg down. Let me pull this back a little bit more. Yeah, this is if you pull this up. I suspect most of the banks are like this. What you're going to see is that this thing was at highs for a long period of time, light volume, all the volumes underneath it. You know, my take is that we're still going to get a bounce, but guess what? That next leg down of the banking sector is going to be a disaster. And more than likely what it is, you know, this time it is certainly not the mortgage-backed securities, you know, because that whole part was cleaned up. I suspect what you do see, which they're all keeping real mum at this particular point, is that how much are they on the hook for oil and gas, you know, down in Texas or across the country, you know, because oil at these prices, there's problems out there. They're laying out there, and you know, I expect, you know, it's a big. Something is. Let's put it this way: there's something inside that banking structure right now that are not only keeping it low, they're selling off, and they're selling off pretty quickly. Citigroup is down at 41.94. That's below the August as well as the September swing lows. And it had volume on the move down. So what that sets up, same type of setup too, man. Pretty amazing. Citigroup, yeah, Citigroup's at 41.92, 34.40 is game. That's, you know, this baby's got some downside to it. JP Morgan, which is no doubt come out with big numbers, that couldn't hold price either. You know, JP Morgan right now is flat for the day, $57.03. The November high out here was $69, so it's already $12 off that number. And, you know, it's building cause to get down to the spike from August 24th. That spike from August 24th is $50.07. So the volatility you're going to see continue. You know, my take is that, yeah, we are going to get this B to C, and it's probably going to have to do with numbers are going to come in, people are going to get comfortable again. You're going to see the bounce. As we bounce, each and every higher price, you're going to see the volume contract as we get to higher price. That contraction, the benchmark that you're going to be looking at is the December 18th level. That was the first leg down, folks. December 18th, like in the SPY, it's 199.83. That's what you want to keep your eye on. And that's quite a bounce, by the way, okay? Bottom line, though, you bounce up there. If you do it with light volume, that's setting up a much larger ABC down that is going to blow away the August 24th levels. You know, so, you know, and the reason that I suspect that the bounce is going to be larger, it has to do with the amount of time, number one, that we were down last week, how the market is reacting here. Numbers are coming out. And guess what? You get option expiration. It's all lined up, and it's lined up pretty good to do a good, run on a bounce aspect. One of the we're gonna get a really good clue out of Big Blue, because there, as I said a little bit earlier, Big Blue to me wants to go a lot lower. But if the Dow is gonna go higher, Big Blue's got to do something after this close, because it's been down so dramatically for so long. I mean, this has been a one-way trip down from $210. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 17. NASDAQ is down 13. S&Ps are down 2. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 28. NASDAQ is down 7. S&Ps are flat. And as we do each and every Tuesday at 30 past the first hour, we have our man, Mr. Basil Chapman. Don't forget, folks, at TFNN, Monday, Wednesday, Friday, live programming, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Get it right on your cell phone. Just go to TFNN.com, hit Tiger TV. Because even if you're in your car, folks, and when you hit Tiger TV, I don't want you watching the TV when you're driving, but you get the audio plus the video. And then when you are at home or basically sitting around, check out Tiger TV. Basil's got an outstanding show every trading day, 10 to 11 Eastern Standard Time, 11 to 12 Eastern Standard Time right here. Also a great newsletter, The Opening Call. You can test drive it by coming over to our website at TFNN. Go to newsletters, go to trading newsletters, and you'll see The Opening Call right there. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. I heard it's like it was like 3 degrees last night in Boston.
It is very cold.
It's still
With the
cold.
Wind.
Okay.
With the wind chill, yes, it's very cold.
Well, the market's pretty cold too.
Can you believe it? It's just on Friday, I said there are certainly 2 scenarios here because I've got a price time match, meaning that by Monday, but since the market's closed, it could be Tuesday. There could be some attempt at a low. The one scenario was that if Friday closed very badly and Sunday night, because Sunday night the markets were open overseas. Sunday night
Sure.
the markets were very negative, and then that negativity held into Monday. And when we came into the to open up the market on Tuesday, if the futures were still down sharply, there could be a very sharp decline because that's what one would expect. If certainly if I'm expecting some kind of a cycle low, but the other scenario is it's not a very positive one because the scenario that I really wanted was to have the volatility index spike powerfully higher, a very, very poor opening on Tuesday, that's today, and then we get a V-shaped turnaround with the volatility index then turning around sharply. I'll just go to this right now. My volatility index, that's the dollar VIX.X, daily chart was in leg D, which would have suggested that if it came down very sharply today, we're going to peak D, and then that usually says you've got a little bit of a little leeway here.
Okay.
But the action coming in with the market much higher should have led to a market being, at this time, what is it now, just after 3:30 with less than half an hour to go, we should have been up quite a bit more. And that would lead into a very nice rally going into Wednesday, Thursday. So the fact that you had a failure today, you didn't get the V-shaped bottom in the market, and you didn't get the inverted V in the volatility index, says that there is still internal selling going on, and that the rally that I thought would maybe come today and last for about maybe into next week, about 3 to 5 days of a rally before retesting. I'm not sure whether we've used that up with today's action, because certainly after such terrible, I mean, look at this chart here. I'm going to the daily chart of the Dow. Almost a match with the decline in August, the August the 24th decline. We've almost got that in terms of the pattern, but instead what happened is you've got this kind of, there's no V-shaped bottom.
Yeah,
And
you were looking basically for a blowout bottom then, right? That's what you wanted, right?
That's right. And then that would have said to me, okay, now what you can anticipate is that that's going to be the pattern that we can expect. And the cycle date will get shorter and shorter as you make lower highs and lower lows. But we keep using up this kind of V-shaped bottom because the charts in the weekly and the monthly are still not yet showing some kind of support. Some of the key stocks that are coming down at this particular point, their monthly charts are just starting to turn down. There are others, like you can go to a DuPont or you can go to an IBM. You're just speaking about IBM. They've been in very poor condition for a while. So they would have given them a chance to have a rotation so that the stocks that have been coming down the longest could have had a rally, and the stocks that are just starting to turn down might have a little bit of a rally, but you'd see the weekly and monthly, they would get the test. So in a sense, it would be a false turnaround today without that kind of V shape. So that says that even if we do get a rally, what it's saying is you've got a lot of resistance, and in the Dow you've got that 9-period exponential moving average of 16,390, somewhere around the 16,400 level, and that's less than 400 points away. We seem to have been doing that on the way down. In one day we do over 300 points. So this is a very important stage because, as you can see from this chart here, the MACD is still coming down. It hasn't started to turn down the daily chart. The stochastic's flattening out at 11%. Flattening out is not really what you want to see. You want to see a good rally that takes you over 20%. That says you've got some energy to the upside. So maybe they're going to have to retry again tomorrow. I'm not sure, but it's a very disappointing day. And what's really interesting about it is that some of the sectors that you would expect to have moved up today are not coming. The IBB is still down sharply. Had a call this morning from one of our listeners who wanted to talk about the IWM in relation to the market, that earlier in the year, 2015, the Russell 2000 had actually led the way, and then it stopped, and then it led the way down, and then we followed. And would the IWM be some kind of an indicator here? And I said, that's a very good point. And the IWM and the New York Exchange are actually lagging very badly. So until you get the sectors that have been the weakest really starting to turn to the upside and sustain the move to the upside, this remains a very tentative market. So we tried this morning for subscribers. We tried to go long. It didn't work out, and we still have our short positions for quite a while now. We've had the IBB, and we've had one of the auto parts companies as a short. We remain in that position. And we've got one stock that's a telephone company that we've had as a long that seems to be holding very nicely. So that could also be saying that within the rotation, you've got some of the defensive, this is not defense like Raytheon, this is defensive type stocks that are holding a little bit better here. So it's a very difficult market right now. So it's just, you've got to be careful. This is the least number of positions we've had in a long time. We're just trying to stay careful and try to preserve some cash, and we will see if we can get some kind of a turn that gives you at least a pretty good balance of 3 to 5 days.
And listen, folks, you can come over to our website at TFNN. You can test drive his newsletter right here, right now. Go to TFNN, go to newsletters, go to trading newsletters. You can test drive 30 days, the opening call right here, right now. And, of course, don't forget, every trading day, 11 to 12 Eastern Standard Time, right on your cell phone, TFNN.com. And we got to have some action after the close, man. Big Blue's coming out with numbers, and that's going to affect the Dow for sure.
And what's very interesting about IBM is that this is part of it's like there's the old crowd, the IBMs of the world, and then there's the new crowd, which is the Amazons of the world. And IBM hasn't shown that they've been able to turn around. They're sitting right on the 200-period moving average in the monthly chart. You're absolutely right. This is going to be very important.
Cooking, brother.
Thank you, Tom.
Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back. Dow right now is up 19. Nasdaq's down 9. S&Ps are down $1.50. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 40, Nasdaq down 5, S&Ps are up $1.50, and let's go into the S&Ps first and take a look at them. Okay, so you have the deviance in the marketplace, 5 days down all last week. You open up, you give it up. Bottom line is that this S&P right now, so on the way down, folks, at 9:40 a.m. this morning, that's the last time we had any juice. That number there is 1881. That's when I started the program. That's how I came up with that number. It looks like this market's going to make that run for it. We made the first run off the low. That low was 1856. You're up 20 S&P points already, which is a mind blower, no doubt. And we'll see how we get into that number, but that number wants to be hit. Now, that being said, the correlation there it's not that the longer term has changed. The shorter term has changed, okay? And what that would be is that you have the aspect of how we sell off. You open higher, you sell off again, and just remember what we didn't do is that we didn't take out the lows of the futures in the NASDAQ or the S&Ps. The real kicker is going to be, can in the next 16, you get 23 minutes. In the next 23 minutes, can you, in fact, get into that number I was talking about? Because that number is important in the context that then you'll have a rejection of lower price. You're going to have lighter volume. And see, if you look at the SPY is a nice setup, and the Qs are a nice setup. They're all nice setups because what had happened is this. You did 100% move of a move. And what that would be is that the SPY was down at 182 in August. It was at 186 in September. Gets all the way up to 211. It comes all the way back to the 185 area. Now, as you come back to the 185 area, you broke down the September swing lows, took them out with volume. You're going to need more volume to take out the August swing lows. When you set up like that and you have a straight line move, and I've talked about it many times, what happens is that the amount of energy day after day after day that it takes on the way down or the way up, it gets expended. So when you're coming into a high volume bar and you've already been going into that, whether it's higher or lower, for a period of time, that's when it's exhausted. Then, can't bust them down, you're going to try to bust them up. And in my take on this, of course, is that as we're busting them up, this is going to be a very large ABC down. Now, the deviance here goes like this. If, in fact, we get this bounce will get people bullish again. That's just how the markets move, which is just amazing. So, because think back for a second. You had the market basically go down in August, come all the way back, and people still bullish. You had so we're at the same spot once again, and there's a million arguments out there. They're always good for long and short. Bottom line, you get lighter volume on this bounce, folks. Sell the heck out of it. We go over and we take a look at Netflix and FLX, because after the close out here, we're going to see these markets move around. And so Netflix can move the NDX 100. Netflix is saying they're coming out with their numbers at 5 past 4. Netflix right now is trading at 107.78. It's up $3.50 right now. And let's see what she's looking at. Okay, so Netflix has been in a consolidation. Okay, we'll take this, put this. So Netflix has been in consolidation now since July of this year. Put this on a weekly for a second. Man, this is a tough one because Netflix, on a longer-term basis, it looks to me that Netflix wants to go to 82. Because right now, this market wants to bounce, I suspect somehow this thing's going to bounce. Who knows what they're going to say. The wild card here is going to be IBM, because IBM, bottom line, just looks like it wants, much lower price. And somehow, because of how the market is set up right now, I suspect IBM will also bounce too. So we'll see where this does shake out. Inside the Dow right now, we just went from 80 points down in the Dow to 80 points up. And it just looks like UNH. Let me just see how this is shaking out. There's going to be a few other equities inside there that are driving that right now. The NQs just went from, let's see, NQH6. So the NQs just went from a price point. This is wild, man. So we just went from 4091 to 4155. So the NQs just went up $60. And if we bring this, so the same number in the NQs, oh, this gets interesting too, because that's really a lot higher. Wow. So check this out. This would be amazing if it runs there. So on the NQs, the number is 4173. It's $20 more than where we were right now. That would be, that's where the last time that we had volume on the way down. We go back to those S&Ps for a second. The S&Ps were at the, I think we just hit the number, actually. Yeah, we did. So on the S&Ps, we just whacked it. We're at 1881 right now, and that's the number at 940 on the way down. So that number, the way you get that number, okay, that's the last time that you had volume on the way down. Market kept going lower. When you get bounces, folks, that's what markets like to do. They like to go back to that number. Now, the kicker here, if we got, how many minutes here? Yeah, you got 11 minutes. That's a long time. You get inside that 1881. If we get to like 1880, let's see, the top of that bar is 89. You get to 1883 or something, man, that can get into, this would be crazy. That could get into the 1894, which would just be absolutely crazy. But that's how these markets are trading. There's no two ways about that. The XLE, let's go take a look at the XLE, the energy, which has got smoked. The XLE out here today, you had a low of 52.33. We're at 53.40 right now. And I put this back. So this has come into the 54.26. Well, it's broken the August lows of 2011. Now, see, this August low of 2011, folks, is a huge problem. The reason being is this, is that is the level that I expect you're going to see the S&Ps go to, which is, like 1350, 1400. And what has happened is that energy's gone down there, the transports have gone down there, you've had some large caps go down there. You don't get that many equities trading into those levels without the indices actually getting down to those levels. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 81. Nasdaq's up 7. S&Ps are up 6. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 60. Nasdaq is flat. S&Ps are up 350. And let's go over and we take a look at them as we come into the close. And what you are going to have out here, folks, I suspect what we are going to have is that we'll have some movement inside at least the Nasdaq futures. Why? Because after the close, I'm talking about. The reason being is that you're going to have Netflix come out with numbers at 4:05. It's going to depend on when IBM comes out with numbers. They may come out after 4:15. So if it's after 4:15, the S&P futures will already be closed. But what I do expect is that you're gonna see some movement inside the NQs as we come into this close out here. So the 4 o'clock number is going to be basically a decent number. I expect these these markets are they've rejected the lower price from last Friday thus far. The intraday they had lighter volume there. They're going topside once again, and we'll find out if in fact this is a bounce in the marketplace and if there's any follow through. the way that it's set up on a technical basis, it looks like it's going to be, because we had that lower low on Friday. Now the cool thing is this: what you have is this: you got higher already, and the first day we're higher, we have lighter volume. You know, the Qs had done, the SPYs had done 324 million shares on that low Friday. We're higher today with 167. That's the first part. Now, the second part is that now, as that was coming down, well, that was definitely lower than what it was going into, which was the 500 million that was left over from August 24th. If we take a look at the NDX 100, it's the same type of setup there, meaning that you have a high volume swing low. You're higher with lighter volume first day. You know, we came down with 91 million Friday. Today you have 53 million on the way up, but that 91 million had been going into 150 million. You know, so what you'd be looking for, if in fact, you know, you're looking for a bounce and you're looking to sell the bounce, then have some patience, you know, because the bounce itself can go up to the December 14th to December 18th area. You know, that's how this baby is set up at this particular point. We go and we take a look at the bonds, and you can see what happened even as the market started going slightly higher and, you know, basically rejected that price. And I'm just talking about, since I've been on. The 10-year bond just went from 128.17 to 128.09. That doesn't seem like a lot, but guess what? It is, because it's in the lower trading range once again. So those bonds will go after the 128 level. We're still at, let's see, WB. You're still at the 10-year bond is 2%, 2.04. You know, so if you need mortgages out there, you're going to refinance out there, go do it, folks. Okay, because this is the time to do it. There's, can bonds go lower in yield, higher in price? Yeah, they absolutely can. But guess what? You know, the bond market has been in a bull market since 1981. I wouldn't be fighting about 1 or 2% on a 30-year mortgage. You know, right now, what had happened on Friday is that 30-year mortgages were the cheapest since April of 2013. You know, because of the fast move in the bond, that was the fastest that it actually got down lower very, very quickly. And the market corresponded to that, meaning the mortgage market corresponded to that level. We take a look at the indices out here. What we have with the indices is this. The Dow, we're going to do about 1.1 billion. After coming down with 1.4 billion. NASDAQ Composite's going to do about 2.3, 2.4 after coming down with 2.8. You stay right there, folks, because we're going to be coming back with a huge amount of numbers after the close. Volatility is going to continue after this close. Dow right now is up 46. NASDAQ is down 5. S&Ps are up 4.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Dare to believe. Market-wise, let's take a look at it out here. We have the Dow Industrials up 27, NASDAQ down 11, S&P's up 2, down 2 rather. Gold contract down $4.10, traded at $1,086 an ounce. Silver up 12 cents, $14.02. Platinum up 7 at $8.28 an ounce. You got copper up 2.5 pennies at $1.96 a pound. Light sweet crude down $1 at $28.41. The bond market, you have the 10-year down 4 ticks, 128, 10, 30, down 5, 158.31. We're going to go right over to Netflix, folks, because we're going to have some high volatility out here in spades. Netflix closed at 107, trading at 117 right now. And if you were listening to the last hour, we were looking for a bounce, number one. And, we'll see where this shakes out. With Netflix coming out with numbers, let's see what it's doing to the future. So it's put a little juice in the NQs. Depending what time IBM comes out, IBM can, my take is that IBM is going to be a dog, but because this bounce is going, I expect what you will see is that somehow IBM will also more than likely go up, which would just be a total mind blower. But anyway, the NQs right now, they're up $7. They're at 41.49. Netflix, NFLX. Let's see what Netflix is having to say. It's up $10 right now. It closed at 107. It's trading at 119, so it's up $12. Let's see what they're saying. The revenue estimate was $1.83 billion. They took in $1.82 billion, so they missed slightly on that. Their earnings per share, though, different ball game. Earnings per share, the estimate was 2 cents. They made 3 cents. Their first quarter international losses was $114 million. Their U.S. streaming revenue, that's a big number. Their U.S. streaming revenue was streaming revenue. Was $1.1 billion, so that's a decent number. International streaming contribution to margin was 17%. Netflix crossed 75 million members. So there's no doubt that's big numbers. Netflix still hanging up there, up $9. We're going to see some volatility in these markets right across the board out here, because what we do have is that, let's go to IBM. Let's go see what IBM's doing. IBM is coming out. Thanks, Dave. IBM closed at 128.11. It's trading at 128.68. IBM, the estimate was $4.81. They made $4.84. Their gross margin, non-GAAP gross margin, that is, and forget the non-GAAP numbers, folks, are bogus anyway. Bottom line, non-GAAP gross numbers, 52%. Now, what non-GAAP is, folks, is this. Picture that you have a budget at home, and your budget, let's just say it's a $100 budget for the week, okay, $100 budget. So you're expecting, let's say that we were supposed to make $25 on a $100 budget. Let's just say you have a business, okay? What ends up happening with a non-GAAP deal is this. A non-GAAP deal would be saying that, okay, inside our budget, out of $100, we're going to have $25 left of savings. And then what ends up happening, folks, our heater goes, okay? So the bottom line, you need a heater. So you not only spend the $25, you spend an additional, $200, $300, $400. That's what non-GAAP is, okay? It's amazing that it doesn't get all the expenses. That's the bottom line. So it's a problem. Now, as I said a little bit earlier, bottom line, IBM, wants much lower price just because we're in a bounce market right now. That is going to be a decent number in the context of this bounce, because IBM, no doubt, could have absolutely destroyed the Dow. And it will destroy the Dow, by the way, okay? Because IBM has been on a one-way trip on the way down. With $210 to $128, that little baby is not done going down. Depending on how long you've been listening to TFNN, I mean, what's been sticking out like a sore thumb, and it's a mind blower that we're actually only 12 points away from it, is 116.80. 116.80 was the high of 2008. And if you come into that with volume, guess what? You can get down to the low of that. So big numbers, IBM still wants lower price. There's going to XLNX, let's see if Xilinx is out with numbers yet. Xilinx closed at 42.89, and that's not out yet, but there's going to be a bunch of other numbers that are coming out. Let's go over and we take a look at the SPY. So the SPY, the NQs, the QQQ, the lowest SPY on Friday was 185.52. Bottom line, I suspect what you're going to see here, if this thing can bounce up to this 199.83, you get lighter volume, it's going to be a monster ABC structure on the way down, and that thing will basically take apart the 3Qs. I mean the August 24th level. On the 3Qs, you're at 101.06. That can bounce up to the 109.23 area. So what I do expect is that you're going to see a decent bounce out of here. Netflix, NFLX, and the market is deviant enough that as the market sold off each and every day last week, bottom line sold off again this morning, and from that point on, basically came back. Cree just come out with numbers. Cree closed at $24.29. That's trading up $25.90 right now, or $1.70. Numbers on Cree go like this. Their revenue, net revenue, that's pretty cool. Net revenue, $435 million. Earnings, they see earnings coming in. So the second quarter revenue, the estimate was $434 million. They actually came in with $435 million. So their revenue number was higher. The earnings per share, they see in the third quarter, the estimate was 22 cents. Now they see from 22 to 29. So Cree could get a little traction here. They're upping, what they thought was going to come in. And Cree's been in a consolidation for a good period of time. What it's doing to the numbers out here, you got the NQs at 41.44. There's no doubt the bounces out here are no doubt extraordinary, because if we take a look at from highs to lows out here today, what you're going to see inside the NQs first is that you're going to see a high that was established at 6:30 this morning of 42.15. You get a low of 4091, and we're going to be laying out here at about 4145. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 27, NASDAQ down 11, S&Ps were down 2. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 27, Nasdaq down 11, S&P's down $1.50. Netflix, NFLX, they come out with numbers that closed at, let's see where she's at. NFLX, that closed at 107. That's trading right now at 117. A Big Blue, that come out with numbers that closed at 128. There we go. That's trading at 125. Cree, that closed at 24.29. That closed at, that's trading at 26.20. Now let's go over to our man, Mr. Andy Heck, as we do every Tuesday and Thursday, folks. Andy's got an outstanding show right after mine every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Also has a great newsletter, the Technomento Commodity Report. You can test drive that right here, right now. Go to TFNN, go to newsletters, go to trading newsletters. You can test drive the Technomento Commodity Report, 30 days, absolutely free. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great. Yourself?
I'm doing good. So the market, the stock market, couldn't really hold that rally this morning, huh?
No, it couldn't.
Oh, really? I've been searching around today I want to, it's a day to be positive. I'm trying to look for something that looks like it's going to go up. I found one market that had a bullish key reversal today.
What was that?
Cotton.
Cotton.
Let me put a cotton chart up here.
That's because it's so cold out. We almost need cotton, man.
Well, it made a marginal new low and then closed above the last 6 days' highs today.
Okay.
Went higher. So, cotton's cheap. It was $2.27 a pound back in 2011, which was a real extension.
Okay.
And now we're talking, up until today, it was about 61 cents a pound. So it's been, decimated.
Yep.
Like a lot of other commodities. So this has got a chance to run up to 68, 70 cents at some point this year. So that's certainly an interesting one.
Sure.
The other one that's interesting to me is there's a deviation, lots of deviations everywhere, but big deviation between the price of gasoline, which in March is at about $1.06 a gallon,
okay,
and the price of ethanol, which is at about $1.37 a gallon.
$1.06 to $1.37. Okay.
So that's kind of interesting. That tells you that either ethanol is a little too expensive here.
Now, how does the mix go? Like, I know when we get gas, it says less than 10% ethanol or something, right? How does
right?
So
right. That's what it is. It's actually they monkey around with those numbers. It's about 10% on average.
Okay.
I know that there was with the environmental stuff, there's been some moves to boost it up to 15 or even higher.
Really?
But yeah, but generally,
well, just so you know, folks, if you're using you gotta, ethanol screws up your carburetors, man.
Yes,
yeah.
Yes, but in Brazil, a lot of the cars run on pure ethanol.
I wonder what they do with boats.
From sugarcane.
Because I don't put ethanol in the boat. In boat engines, it's really. And it probably has to do with you don't use them as much. That's why, probably, I guess. Yeah.
Right. But in any case, that's a bit of a divergence there. The dollar's pretty stable. Crude oil, what can we say? It looks like it wants to test $25 a barrel.
Yeah, it didn't hold.
It really does. That's those April 2003 lows, 25.04. But this thing just continues to melt, and I think that's rough for the stock market. Dollar is very stable here. Gold. I wrote an article this week, and I posted it in the den before. It's gold, strong but weak. Everything else is falling like a stone. Gold falls like a feather. Gold, if you look at it, you measure it against, I don't care what you measure it against. You measure it against oil, against silver, against platinum, against grains. Gold's really strong. but it's still falling.
Well, you know what's so wild today is that silver, held the $14 price point.
Right.
And,
It went back
it's
above.
been dying on the vine. But yet, a lot of the gold and silver equities folks had a huge problem out here. There's divergence inside of that, but that is about as deviant as you get.
Yes. And you look at silver, it's basically, it trades above $14, it starts to look okay. It trades below $14, it looks terrible. Back, over the past couple of weeks, that's been the modus operandi for silver.
It has.
The range 1362 to 1464.
Yeah.
It's got to break one way or the other to get back into a trend. Now, platinum made a new multi-year low yesterday and today. We traded down, the old low was 8.25. We traded down to 18 and a half. That thing just continues to melt. I think that the strong, 80% of the world's production of platinum comes out of South Africa. So a weak rand means that the South African producers are not feeling the effects of lower platinum to the same effect that we see it in dollars.
No, because actually we take this up. Watch, let's see, there it is. I'll put it up right now. Look at this. So it's not like gold, however. So the high in platinum in rand dollars, folks, is 18,242, and right now we're at 13,876.
Right. Right.
Where gold is at new all-time highs.
Right.
And the rand dollar. Yeah.
Exactly. Yeah, but platinum's a $260 discount to the price of gold.
I know, man.
It's like unbelievable. I mean, this is a thin market, an illiquid market. I showed last week how oil and natural gas converged after a long-term divergence.
Okay.
And eventually we're going to see gold and platinum diverge again, come together again. I don't know when it's going to happen. These things tend to mean revert over time. But 200. Listen, we all know they called platinum for a long time. They called it rich man's gold. It's not rich man's gold today. That's for sure.
And folks, okay, so if you are in the metals market and you're looking for metal, Everbank has ounces of platinum, okay?
Absolutely.
And if you're going to buy something, buy them, okay? I'll give you their number. It's 855-750-4051. It's 855-750-4051. Now, this is not something to trade, but if you're going to buy something, man, that's what you want to buy. And I mean, gold's at 1086, platinum is at 827.
I agree 100% with that.
And I know I've got plenty of feedback from Tigers that have called them up, bought 2 or 3 ounces. Bottom line is that, a market's a market. That can it go lower? Yes. Is it a value? My God, it's unbelievable.
It's on sale.
Yeah. Yeah.
No question.
Yeah.
I mean, it's ridiculous. The interesting thing, let's just put a platinum chart up here. It's a thinner market than gold, certainly. It's a very thin market. But open interest is starting to pick up a little bit here. It is oversold. I mean, and as well as I do, Tom, when it does turn around, there'll be no getting in.
Oh, well, listen, the last time, so in 2008, folks, the platinum was a one-way trip. It went from $2,300 in February of 08 down to $744. Right. Then you did another bounce up to $1,879. So my point is, it's testing those lows, okay? Can it go lower? Of course, we know everything can go lower. But you know what? The odds, folks, hey, listen, my take is that that's a good trade. It's more than a good trade. The spread is absolutely phenomenal, I
agree. And you know what? Platinum does have more upside because of its rarer nature. 10 times, there's 250 tons of platinum produced each year. The 2,800 tons of gold.
Right.
It is a truly precious metal.
It is. Well,
all right.
Yeah, I know, man. So, listen, Andy's coming back 5 o'clock, folks. Normally I have a couple segments, but we got our man, Mr. David White, coming up. We're going to give you a little variety of life out here today.
I'll see you next Tuesday. I'm off Thursday. Take care.
You're off Thursday. What the heck you doing, man? You're taking too many days off.
I got to travel, baby.
Yeah, travel. You better travel here. Thanks, man.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 27, NASDAQ was down 11, S&Ps were up a couple, and right now we got our man, Mr. Dave White. Now, folks, every trading day, 8 o'clock in the morning, 5 o'clock at night, Monday, Wednesday, Friday, Tuesday, Thursday, 7 o'clock in the morning to 6 o'clock at night, all live programming. Dave got a great program every trading day, 2 to 3 Eastern Standard Time. Now, you can get all that programming right on your cell phone. Just go to TFNN.com, hit Tiger TV. Why Tiger TV? Well, you can get the audio plus the video. Now, tomorrow, our man, Mr. Dave White's going to be doing a workshop. If you come over to the front page of our website at TFNN, you're going to see Join David White for a special 60-minute subscriber event. Now, if you're not a subscriber to David's newsletters, he has 2 newsletters. He has the Path of Least Resistance and the Tech Insider. The Path of Least Resistance is a trading newsletter. The Tech Insider is an investment newsletter. You can test drive either one of these or both of these right now for free. You do that, it'll get you inside the workshop. That is tomorrow night, the 20th of January, 5:30 to 6:30 Eastern Standard Time. If you can't make it, it's on your webpage for 30 days. Dave White, what's going on?
I'm getting all fired up for tomorrow night at 5:30.
That's right. So Tommy and I were talking about this morning. So can you fill us in a little, about exactly the type of research you put in and what this workshop's about, Dave?
It's about really 2 things. One is probably a refresher for all the people that have not been in a bear market before.
Okay.
This would be my 3rd. With the .com bust, the housing bust, and I don't know what we're going to call this one, the crude bust?
Yeah, maybe. Yeah.
Maybe, but it certainly is. Certainly looks like we've cracked. I don't know if it's a combination of many things.
Yes.
Normally it's not one. But yeah, we're looking at our 3rd bull market, our bear market, I think, or at least for me.
Sure.
And one of the things that you learn is that it's not like you get 6 months and a bunch of books to figure everything out. Sometimes you have to experience them, and sometimes you see things in one bear market that you do not see in another. So we're going to talk a lot about the history and what I've learned over the last 18 years or 17 years.
They went quick, didn't they?
They went. And another thing is I've come up with a way of getting daily short volume in the markets.
Which is huge, folks, okay? Because when I'm even giving you on the Bloomberg, what the shop percentages, I can ask Bloomberg, but I don't know what that is, and it's certainly not daily. That's the bottom line.
It's not daily, and we actually put out a half of the white paper, which I think may still be on the
yes, it is
on the website. And we talked about the problem with the way it's reported, that a lot of times someone could be short, or a big hedge fund or a big operator, or Goldman Sachs, or any of these guys could go short on the 1st, and you would know about it until maybe the 20th or the 24th of the month. So being able to see people come in and short, now this data is very noisy. So we're going to go through, and I'm going to give out a spreadsheet that shows how to figure out what is the wheat and what is the chaff in all this noise. But I wanted to just talk a little bit, especially to people who have never been in a bear market before. I wanted to give a couple examples in this segment. And the first one is, especially, I talked a little bit about it on the show today, but let me find it here. And that is Solar City.
Okay.
If we look at this, in fact, let's zoom back in. This was a stock, and probably the first thing that we talk about is maybe the short interest in a stock and how dangerous this can be. Because, of course, it'll go from maybe nothing in a stock to huge. And then, of course, sometimes there's real news, sometimes imagined or made up news. And if there are enough people on the opposite side, i.e. far too short, it's easy to kind of go in and make a move on a stock and stick it to people when the stock probably doesn't have a lot of long-term legs. Solar City was one of those. I wanted to pop back up just on the NASDAQ site and show you how many days it was to cover. That day to cover number is if they took all the shorts and the average volume each day, how many days would it take to get rid of all the shorts out of the market? Right. And on the November 30th, although this data you wouldn't have had probably until the 20th of December.
Okay.
On that day, it would have taken 8 days of nothing but the standard volume in the stock to get all the shorts out of the market.
Yes.
So what you really have to worry about is these, even in a market, in a bear market, is stocks that have far too many people in it short, because it attracts people that'll want to squeeze you out.
No doubt, right.
And the risk reward can be, look pretty good in the chart, and then you figure out later on that, did you get your hat handed to you? So we're going to be looking a great deal of how to put the risk reward together, how to make sure that you're not on the wrong side of something like Solar City, even in a bear market. Because
now, it's pretty cool that you're doing this on option expiration week, too.
Well, it was last week.
Oh.
It was Friday.
Oh, bummer. Okay.
Yeah. So we talked about it a great deal going into it. The other thing that we talked about today on the show was something that's in your book. And we haven't been able to use it for a while because we haven't had a market that's really pulled back significantly. But I spent a lot of time on how to set up shorts, and we were talking about confluence levels. In fact, I showed a few on the show. We're going to be talking much more about how to, as somebody in the den said, sit on your hands until the stocks line up. Because as you say quite often, stocks don't go straight up or straight down. And there's going to be some pretty wicked and quick reversals where these shorts who maybe have too big a short interest in a certain stock are going to come back up, and they're going to give you an opportunity to short them again.
Yeah, and this is where the patience definitely comes in, folks, because it's a mind blow that they can even get a bounce going. But it happens. It always happens, too, by the way, okay?
It always happens. And even in stocks, I remember in the dot-com days where stocks literally made zero cash would go from $200 down to $125 and a day be back at $160. And
I
you
know.
think, how could that be?
How is it possible? I know, man.
Yeah, I mean, this stock is worthless. How can it do that to you? And the answer is, when everybody's going short, you really have to watch out, because it's pretty easy for market manipulators to get in and run shorts out. So it can be dangerous, but we're going to come up with a way of giving data to you much better than 20 days in the rearview mirror.
And folks, the way it comes to the workshop, come over to our website at TFNN. You're going to see it right on the front. Now, if you're not a subscriber right now, you can take your choice. You can subscribe to both of them. They're great newsletters. You can subscribe to them now. That gets you in the workshop immediately. It also gets you the white paper that Dave did. Okay, there's one right on the site right now that you actually can read under breaking news. You can take a look at that one. Once you sign up for the webinar, you're going to get emailed another one immediately. So that's an explanation of what Dave is looking at. So you'll have the explanation before the workshop even starts. And of course, we got a nice volatile market. And bottom line, volatile markets give opportunities on both sides of the market.
Yeah, this is not just going to be good for shorting. We're also going to talk about how we can maybe participate in some of those short squeezes.
Yeah, do the squeeze. No doubt, man. No doubt.
Very quick.
Okay, man, have a great one. Have a safe one, Dave.
We'll see you tomorrow.
Okay, we're coming right back, folks. Stay right there.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Okay, so Big Blue come out with the numbers. Fourth quarter profit beat analyst estimates that had been significantly lowered. Now, you got to remember something, folks. What they're not even mentioning in here is that the amount of stock that Big Blue has bought back. They were trading at 210. They bought stock, I believe, all the way down to about 150. Then they announced that they were going to save some money. They weren't going to buy the stock back. This is just, you talk about a waste. It's just absolutely amazing how this shook out. But bottom line is that, it's not only lower, you're talking about a lot lower. So adjusted earnings, excluding, and this is where the non-GAAP numbers come in. So adjusted earnings, excluding some items, fell 17% from a year earlier to $4.84. Fourth quarter revenue declined for the 15th straight quarter to $22.1 billion. Now, if you want to see a decline, folks, watch this. This is pretty amazing, actually. Numbers, this is how the decline shakes out. If we go back 5 years, Big Blue was taking in $29.3 billion per quarter. Now you're taking in they just took in, they took in $21 billion. So bottom line, $9 billion less. Numbers-wise, I suspect what you're going to see here is that they're going to end up laying more people off. 397,000 employees they have right now. Netflix, NFLX. Let's see what good old Netflix is doing out here. So Netflix closed at 107, trading 115. And Netflix, of course, is just driving the networks crazy because Netflix won't release their numbers. Now, what ends up happening is that the network TVs, folks, work with Arbitron releasing numbers. I always thought Arbitron was a gaffe anyway. With Arbitron, it's arbitrary. That's the real bottom line. They come up with these numbers, and this is where the whole bureaucracy and structure inside the entertainment business has made fortunes and continues to keep the status quo. And what I specifically mean is this. So you get NBC, ABC, you get the big networks. Then you get an Arbitron number. As you get the Arbitron number, what ends up happening, the networks have to pay Arbitron to basically give them the number. Then what ends up happening is that the advertising agencies, the large agencies, they only go off that number. They don't know whether people are actually listening, not listening. They go off that number. That number is what sets the advertising rate. Bottom line, what does that mean? That is, when you take that together, that is a true bureaucracy that will always protect the status quo. Why? Why not? Because what ends up happening, the advertising agencies say, oh, that's what the number is. That Arbitron says that's what the number is. The real bottom line is that do they get any business? That business model has been getting blown apart for the last 7 or 8 years. Netflix, refuses to give numbers out, period. Why? Because they don't have to, number one, because they're not an advertising platform. What they do have is that they have they just crossed 75 million members, and of course the 75 million members that are paying, whether it's the $9 a month, and that's how they make their money. So I suspect, if we go look at where Netflix is trading right now, I wouldn't be buying Netflix, by the way. What they have done, though, there's no doubt, business model-wise, I think they're going to continue to destroy the network TVs because, I haven't unlatched the cable deal yet, but every time that bill comes in, man, you're so close to it because it's like, for the amount of time I watch Netflix versus cable, I mean, $8, or I think it's $9 now. It's one of the best deals out there. At $117, this has been consolidating for quite a while. I suspect as the market gets lower, Netflix will come down with the market. We go tomorrow. What you're going to have? Goldman Sachs, I believe, is coming out with numbers tomorrow morning. 20th, 0730. Goldman closed at 156.82, and this. So, what you have inside the banking structure, the broker-dealer structure, folks, is that these equities have broken the August and the September swing lows and broke them with volume. Goldman Sachs has just gone from $218 in June to $156. We put this on a monthly basis, and what you're going to see. Okay, so it looks like Goldman's on its way to 131.27. Now, if we get volume at that 131.27, it's going to be a huge problem, man. I mean, because Goldman could get down to $95. Now, when we look at that, it's like, okay, what's wrong with the banking structure? And all of them are like that, by the way, folks. So we'll find out, if in fact, we're talking Bank of America, that broke the lows. J.P. Morgan is going after the lows, and we'll see if in fact it's the amount of loans that they are on the hook for inside the oil and gas structure. Because the oil and gas structure, this is where the yin and yang come in, when we like lower oil prices. Because there are so many companies and so much money and so many jobs are tied to the oil and gas sector, what does happen, yes, we save money, but that sector gets destroyed. And what had happened is this, is that sector could take and get as much money as they wanted, just like a snap of a finger. Okay, why? Because we had oil at $100, and that's a huge bust. What hasn't happened yet is that the amount of loans that are out there haven't been called. The credit hasn't been called. And I suspect what the banks are going to try to do is not call it as long as possible. And this is why. As soon as one large bank calls in a loan, then you're going to have what? We're going to be right back to, in the 2008 crisis, it was a mark-to-market. If you remember, I actually remember Steve Forbes out there, fighting that you shouldn't have to mark-to-market. I was saying to myself, what are you, crazy? I couldn't even believe he was saying it. Because he was saying no, because that wouldn't be right because you're going to go back up. It's like, oh my, that's insane. Well, bottom line is that when one bank marks to market, and the only way that's going to happen is they're going to call in a loan, the other banks' balance sheets, that will end up being a material aspect, and those regulators will make them start calling in. That's what it comes down to. And as one of the Tigers saying that FASB requires a mark-to-market, and it does require a mark-to-market, but that's my point, that it has to be called in first because those loans are not trading. If it's a loan with the bank, that is not a tradable loan. So that's how this structure kind of gets done out. But it's good. Listen, someone's going to blink. That's what it comes down to. You stay right there, folks. Dow right now closed up 27, NASDAQ down 11, S&Ps were down 350. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Now, let's go overseas, and we'll take a look at Asia last night. So you had the Hang Seng up 2%. You had the Shanghai up 3.2. This is, of course, after all these indices, just as ours got smoked in a big way. If we go over to Shanghai first, what you're going to see is this. We're at 3,007, and Shanghai came into the low of August. The low of August in the Shanghai is 2850. You had 46 billion there. We did 2844, and we did that with 16 billion. So you can see what happened in Shanghai. It was a straight line move down from 3684 to 2844. It's quite a move. Rejected that price. Now you get the bounce going. And what you did with Shanghai is this, is that Shanghai came off that bottom with expanded volume. So Shanghai did 20 billion last night. Now, what you're going to be looking for in Shanghai, I suspect Shanghai is going to be up tonight. What I expect we're also going to see, though, is that now the volume will contract as you get a dead cat bounce going up to 33.27. So that'll be a 10% move on the way up. That'll be setting an ABC structure on the way down to go blow away the lows that were established out here in August as well as last week. Let's go to the Nikkei. See, the cool thing here, folks, is that indices across the world are set up the same way. The Nikkei came into the lows, and the Nikkei is set up like the small caps. The Nikkei, the September low broke the August low. The Nikkei on the September low is 16,901. We got down to 16,665. We did that with 1.5 billion versus 2 billion. So we tested it, had 500 million less, rejected it. Nikkei was up 92 last night. Now the Nikkei can bounce all the way up to 18,562. We shift gears. We go over to the FTSE in the UK. FTSE. There she is. Okay, so the FTSE in the UK was up $96 today. When we were closed yesterday, it comes the August low in the FTSE is 57.68. We had done 1.87 billion there. We got down to 57.66. Oh, wow, that's crazy, man. So we got 2 points below it. We did 750 million versus 1.7 billion. So, and the FTSE, it looks to be, this is really weak and it wants to do a monster ABC down. The FTSE is something you really want to keep your eye on because the FTSE doesn't have to bounce like the rest of these indices, meaning as far. I think the FTSE, even at the 50, man, this is crazy. We'll see if the FTSE can even bounce 200 points. We're at 5,800 right now, like 60, 71. That's another 200 points. The DAX in Germany, what we have with the DAX in Germany, the DAX also got down to the August levels. Well, actually, yeah, the August levels, 93.38, 294 million shares. We got to 94.59, so it was 120 points higher. We did 146 million versus 294 million. The DAX wants to bounce up to somewhere about 10,400. So you have harmony in all the markets. Fast, furious on the way down. They bounce. We'll see what the bounce is on lighter volume. Monster ABC down. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Stay right there. Andy Heck's coming right up. Go get him, folks.